Really excited to be bringing you this webinar today, completely focused on the long-term care space. So we're going to be talking insurance products, but we're also going to be talking about education and just the market in general, and some things, some tips, some tricks, what these experts see every day and work in every day. And so we'll get a little bit more into each person's specialty and expertise as we go along. But we do have with us today Karry Ballinger, CLTC, in the DFW area here. And then we have Wendy Boglioli, who is actually in Florida, joining us all the way from the East Coast. And then Jeremy Veryser, who is with One America and also here in the Texas area. So we're going to jump right in. Karry, you've got over 25 years specifically in the long-term care space, and mainly in, being an advocate, being in the brokerage space, being, working with advisors, even helping with the clients. So with that, kind of unique perspective, long-term care is a very unique discussion, even in our industry. So if you don't mind starting us off, I'd like you to tell us a little bit more about what makes it so unique to you in this specific space.
Absolutely, Derek. 25 years, I can't believe that. It is a very unpredictable purchase. It involves not just financial decisions, but health, emotional considerations. It's so important to be a good listener. You can't run through this planning process quickly. I promise you that each client is very unique and they all have their own story. I plan for each client differently. And if you don't listen to that story, it's very hard to plan for them. Long-term care insurance planning is not just a product, it's a process. And I promise if you take the time to understand that story, those products will fall into place. And your clients really take notice of the time you take to listen to that story, because it involves kids, it involves their family, what they've been through. So I just encourage you to listen to the story first before just, throwing out. It's not all about illustrations. It's about that story and then putting that plan in place, if that makes sense.
Absolutely. And Wendy, I want to make sure we get to you on this one too, because you talk about yourself as a healthy aging advocate along with what you do in the long-term care space. And you have a unique perspective in that you do so much in the group markets. And we're going to get to more of that later specifically. And you deal with a lot of groups, you deal with a lot of enrollments, which is something that those in this space don't even necessarily do very much, those that focus on it. But same question to you, what makes long-term care a unique discussion even in this space?
Well, given on the traditional side, and Karry, you're just such a great advocate. And I love the fact that it's all about personal stories, because every single person has a story to tell. And the biggest difference that I find in my career is listening to that story. And when we talk about the group space, it's unbelievable listening to HR's, their story. Most of HR today is I don't want to say the word run, but women are at the helm of HR departments, and they all have a personal story. So if you've got an advocate in HR, in a business, in a company, working with advisors that also have that story, it's just such a great fit, because they don't know what they don't know. I think bringing that personal story, identifying their why. People say to me, gosh, Wendy, with the Olympics, because I'm an Olympic gold, silver, bronze medalist, what was your why? My why was understanding that I wanted to be an Olympic champion. What was that going to take? I had the why when I was 8 years old. The thing that in long-term care that I think is so the same as in elite sports is you have to figure out the how. And that's where a Jeremy comes in. That's where a Karry comes in. That's what we do, is figuring out the how financially, emotionally, physically for clients in any of the long-term care spaces.
Absolutely. I love that. And for those of you joining us that are maybe in the Texas area, Wendy's going to be a platform speaker for us at the NAIFA-Texas conference in Austin in February 10th through the 12th, I believe are the dates for for that conference. So you can hop over to the NAIFA-Texas website, see more about that. But that's not so much going to be. Long-term care is just, again, her story, an Olympic gold medalist, an Olympic medalist, amazing story there. So yeah, love to see and looking forward to hearing more about that in person here in a couple of months. So as we keep moving, Jeremy, I want to jump to you now. So what are you being asked about most right now in the long-term care space? I mean, what does just people keep coming to you for?
Yeah, I mean, we're in this sort of pivotal point in time where we have what was historically one of the largest segments of our population, i.e. the baby boomer generation, who this year, the youngest are 60, the oldest are 78. So we're knocking on the door at the tip of that iceberg, unfortunately, of a lot of these folks who are going to have events in the near future, potentially. And so what we're seeing is a dramatic shift. It really probably started about 4 or 5 years ago. And I know we'll talk more about our demographics, 65 plus, peak 65, silver tsunami. But I will say what we're being asked about most is really a true desire coming directly from the consumer to want to create a plan, because a lot of these folks in their 60s and early 70s have now been touched by some sort of event, whether that was mom, dad, mother-in-law, father-in-law. And so what before might have been a back burner issue has now become a reality. They felt the pain. So there's a desire to find creative ways that are better than maybe just self-funding this, of which I know that Wendy and Karry, you can tell already just in the short time they've spoken how well equipped they are and how much they care about the consumers they work with. But I know they would agree, we have more options today than we've ever had. We've got a whole gamut. So kind of dovetailing off what Wendy was saying about finding the right fit. But there's a big desire from the American public to want to address this and want to learn about the options that keep them in their home as long as possible.
And I love what you said at the end there of keep them in their home as long as possible, because I think that's a really important detail to how people want to age and where people want to age and how they want to go about it, where it's not only more product options, it's more care options. There's more people out there that are focused on this. I was just at a local association meeting where the entire conversation was about an organization that focuses on private care, and that's all they do. And it's their entire bill. And it's not just about medical, it's about organizing their finances and helping them understand how to file paperwork and how to go about this process. And these experts exist already. So I think a key point to this is if you aren't aware that there's people out there that their entire job, their entire role, everything they do is about making an individual's life easier in this scenario, they exist. And it's not just about the insurance and the funding, which is so much of what we all do every day and what we see, but align yourself with these people that are out there trying to help and just want to do this on a daily basis, because they're out there. And if you don't know where they are, feel free to reach out to anybody on this panel, because if nothing else, they probably got a pretty strong Rolodex, or Rolodexes aren't around anymore, but you get the point. They got a good amount of names of people they can help put you in touch with, that these are who you need to know. So Wendy or Karry, I want to give you all the opportunity. What are you being asked most about right now?
Wendy, you want to go, or you want me to go?
You go ahead. Go ahead.
Okay. I just want to say really quick, Derek, that you are right on the money. I won't spend too much more time on what you said, but I just had to redo my business card and my email, because I just added claims advocate, Medicare advocate, all of those things, because I don't specialize in claims or Medicare planning or anything like that, but I'm connecting myself with those teams. I just started working with a very large Medicare firm here in Texas, and I asked her permission to be that arm on Medicare so I can send advisors, financial planners, clients to her. So we have to be armed with all of those tools to make sure that we have the resources for the clients and the advisors that we work with. What am I being asked about most right now? And I'm just going to go right into long-term care planning. Number one, what age should I purchase long-term care? I always say start at age 50, don't wait till age 65 because that's when all the health issues start coming around. Number two, what does long-term care cover? Make sure you're letting these clients know and advisors, it doesn't just cover nursing home. We cover home care, assisted living, adult daycare, home modifications, et cetera, et cetera. Number three, this is a big one. What is the average cost of long-term care in 2024 versus 2044? How do I plan for that? And I'll save the tools for later. But one more thing that I get asked a lot is how much coverage do I need, Karry? That's really going to depend on your finances, what your goals are, and how we match that up to create those benefits. And that's why it's important to listen to that story. So you're not just throwing a quote out there, but you are aligning those benefits along with their financial solutions. And that's why I work very closely with advisors to make sure I'm getting that right.
Yeah, really almost identical, the same things, Karry. The big one is, Wendy, what actually is long-term care? So I always explain it, well, we all know what it is, right? It's the inability to live independent of another person for 90 days or more, needing help with your activities of daily living. So eating, bathing, dressing, continence, grooming, moving from a bed to a chair, or severe cognitive impairment. So people go, oh yeah, well, my mother, she was 92. Nah, she never really needed care. Well, where does she live? Well, she lives with us, Mike and me. I'm giving you a perfect example. And I said, oh, okay, so your mom drives. Oh, God, no, she doesn't drive. No, we do that for her. But she does everything else. She does cooking and manages her own banking. Oh, Wendy, absolutely not. Well, how does she function financially? Oh, we help her with that. I think the big thing is people actually don't recognize what long-term care is. They think because the mom or the spouse is living with them and they're doing all of this stuff for them, that's not long-term care. So I explain it that way. The other is, to Karry's point too, is when's the best time to buy? I get this question all the time. Wendy, to be an elite athlete, when is the best time to start? You start early. You start early and don't wait. And there's a number of factors, price-wise, absolutely, health-wise on the individual market, absolutely. What does it cost? And that is where, to Karry's point, listening to that story, understanding where they come from. Hey, look, I love tuna fish, but I'm not eating that 4 times a day to buy a long-term care policy. So it's got to be affordable today and into the future.
Absolutely. And again, we're not going to go too deep on any individual product solution on this webinar. I mean, that's something any one of these people can have conversations with you about in the long term. But I will say, when you look at it, I know, Karry, you put out there in some of your information, just all the different types of products and how you can do, okay, it's asset-based. There's guaranteed acceptance products now. Is it going to be on a life insurance or a direct contract? No, but there are annuity options out there. If you have somebody that's got money set aside, you might be able to repurpose that. Jeremy, that's something One America does incredibly well as others. And to, the point we talked about earlier that we're going to get into, there's more out there that actually employers can now engage in. That is something that used to be pretty incredible, kind of disappeared on us or was very hard to find and has come back really strong. And I don't think people know that. So again, we're not going to go really deep into any one product, but just know there's linked benefits, there's asset-based, there's, life insurance, there's living benefits, there's, LTC riders, there's the traditional products, there's group products. This is not your father's long-term care. There's a lot there, and don't assume just because, oh, well, I don't think somebody can pay, $1,000 a month. Okay, move on. Don't ever make that assumption because there's a lot more out there now. There's a lot more resources to try to solve this problem. So speaking of tools, speaking of resources, I know each one of you has your own way of explaining the risks, the spectrum of products, kind of what's out there. But Karry, I want to start with you. What are some good tools for people to be aware of? You mentioned that a little bit earlier. I want to come back to that.
Absolutely. Mine is very simple, and there's so many things, and Jeremy has showed me so many tools over the years, but one tool that I use in every meeting is the LTCI calculator. One America has a great one on assetbasedlongtermcare.com. Correct me if I'm wrong, Jeremy. The other carriers have them through Genworth, Nationwide, etc. But that is a very simple tool that gets my point across. When you heard me say, they ask me how much benefit do I need? How much is the cost of care? I go right to that tool. I can go right through that asset-based LTC and show them this is the cost of care right now in Dallas, Fort Worth, or Houston, or Austin, or wherever you are in 2024. But what I'm concerned about, Mr. and Mrs. Client, is 2044, 20 years from now. So let me show you what that home care, assisted living, nursing home looks like, because in that calculator, you have a little glider that I can go all the way 20 years in advance. And that's where I take them and say, that's what I'm planning for. You're 55 right now, Mr. Client. I'm planning 20 years from now. And their eyes just kind of open wide, like, wow. You know, when I show that to them, they really understand maybe why it's important that I'm adding 3% compound inflation, why that cost of that premium went up. But again, it all depends on what they're trying to accomplish. I have a lot of clients who are high net worth where they want to take on the extra, and maybe they just want to purchase a supplemental long-term care plan for themselves. So that LTC calculator, several carriers have them. I prefer the one that One America has. It has all the states, so you can go to each state and look at that. And then it drills down to each city. And it will show you on a daily, monthly, or annual basis, which is awesome.
Absolutely love that. And I know, Jeremy, I think you actually mentioned also, you know, some one or two online tools that are carrier agnostic. If you don't mind mentioning, you know, bringing that up real quick.
Yeah, recently LTC News just rolled one out. And so I think we can drop that in the chat, or we can send it to anybody who attends after. It looks like you might have, you're throwing the One America one in, but there's another one that's agnostic. But I mean, really, you know, what you're looking for is exactly what Karry mentioned. And that is, you know, something that can really drill down to, you know, in-home, assisted living, hospice, the whole gamut, and really kind of drill down to the specific area that one lives in, project that out. And then, you know, for us too, I would just say, look, as a carrier, in my role, as you know, Derek, I work at the distribution level with the DI Center, right? Buddy INS, all these different firms. So I'm kind of not directly associated at this point, right, with the end consumer. But as a carrier, we're always looking for what is something we can roll out that will be an absolute game changer. And there's never one individual marketing piece that, whether it's consumer facing or agent facing, but I will say, we have seen an enormous amount of positive feedback with our plan for care. And I know that Wendy and Karry have versions they use. This one that we have, of course, is branded to One America, but really it could just be anybody on this call could use it as a guideline. And it really does twofold. I'll give you the first example. We have an advisor here in Colorado, actually, that he's been very adamant on bringing this topic up with his clients. But, you know, naturally, he's still got some clients that have said, no, I'm good right now, right, for whatever reason. And when he started to implement this plan for care, which we would recommend that everybody on this call do with every client, because things change, right? Seasons change, reasons change. I may suddenly have a family experience, and now I recognize it, and now I do want to revisit this. But in the meantime, what this plan for care does is it helps you, you know, basically says, as your agent, as your advisor, it's my duty to know what is the plan, where would you like your care, who's going to provide that care. If you're going to self-fund by default, as so many Americans unfortunately are until they create a plan, in what order are we going to liquidate the nest egg? And then the client signed this. So the second thing it does is it sort of acts as a CYA for the agent and the advisor too, to say, we've had this discussion at this point in time. The client or clients have chosen to rely purely on their assets. So that one document for us has been, you know, I hesitate to use the word game changer, but it's moved the needle for folks.
Absolutely. I love that. And so I did just drop that in. It might have come through weird, so I'm going to try and post it again in case anybody had issues with that first link. It was not coming through quite right. So you'll see there's a couple links in the chat right now for some different tools out there. Again, these are things that we can give to you offline as well, but we wanted to try and provide some of it in real time so you could see what we're talking about. So I'll hit real quick. Wendy, any tools that you guys at Buddy INS just love?
We have a benefit. It's in our buddy system, and it's very similar. And Jeremy, you've seen it. I know, Karry, you've seen it, where it actually can show like yours. And there is not one perfect tool, right? But what it does is it shows the leverage of your dollars compared to what you're spending self-funding. It'll show a pie chart here. If you want to self-fund, this is what it's going to look like to self-fund and how long you can do that. And if you need care in between now and the time that you need care, is that going to be enough? And it shows that leverage. And then it shows with an insurance product, whether it's One America, Nationwide, NGL. I mean, we've got that all set. So people can actually see the other piece too. And I love the Genworth. You know, I was with Genworth for my entire career until 5 years ago. So, oh my God, 9 years ago. But what I love every year is their cost of care survey. And there are so many out there, and they're all pretty much online. When my dad needed care, which is why I'm in this industry, he needed care. I saw what happened to my family and my mom, and you know, it was just a total nightmare. And that was 45 years ago. It was $18 a day in a nursing home in 45 years ago. And we couldn't afford $18 a day. So you fast forward with the cost of care and you look at the cost for home care, assisted living, nursing home. And I'll say my mom passed away in 2015, spent 4 years, 3 months, and 31 days in a facility, which was the best place for her financially and safety wise. It was $8,700 a month. And people go, oh my God, 87. I don't care how much money a person has. When you are writing a check for $8,700 a month in, month out, year in, year out, you cry uncle. And what the cost of care does is it puts it into perspective. What the tools that we use put it in perspective, because you can plug in the numbers for your client, the age, the benefit, all of that. And it becomes a real clear marker. Hey, is this something that I should be looking at? There's never one way to fund long-term care. I mean, I love insurance, I do, but there's still family, there's still your own money. There's not in the government, at least as we know it today. So you do have different ways of paying for care. And I always make that point. Look, if you needed care today, who do you want to pay for it? And then you can work with those other ways to pay and make make sense for that client and their family. And lastly, I love what the calculator shows, because I love what the cost of care shows. Ultimately, a decision is going to have to be made by family. Long-term care is never going to be about that individual buying that policy. Never. It's about family. And if families do not understand what this is, and if there's a plan in place, you leave enormous decisions for families to make. And quite frankly, that's just not fair. You know, it's one thing if, and Karry, you've had clients, oh, I'll let my kids take care of me. Well, which one? I mean, and you just kind of have those kind of conversations. Ultimately, at the end of the day, it's their money, it's their life, it's their family. What we do here is help them make an informed decision so they can make an informed decision.
I love that. I could let you be on your soapbox all day long.
Derek, you love everything that I've been saying today.
I do. I'm a big fan. So but I think it's incredible because it is about education. We talked about it before. We're going to keep talking about it because this market requires that knowledge and a little bit more information, because there's so many incorrect assumptions. There's just so many assumptions people don't even realize they're making. Like you said, the one of, oh, my kids will take care of me. Well, do they know that? Are they aware that they're taking care of you? Has that been even a conversation? And if it has, then okay, great. Let's go down that path and let's see what that means. But it's very often just this, unforeseen consequences because people think this or these people will step up, or I've got enough over here. And, it's just about, okay, if you make an informed decision, and it may not be the decision we think is the right one, but at least it was informed. You know, at least you knew what you were getting into. It's about, you know, are you understanding and taking risk appropriately, or are you just taking on a lot of risk that you don't even realize? That's so much of what we do. So as we keep moving here, Karry, I want to come back to you, and Jeremy kind of mentioned this a little bit already, of this silver tsunami, as I know the term One America is used, and Roger Cantu's used that. I love that term, but it's this idea that we have this aging population, primarily the baby boomers, and the largest number of Americans are turning 65 this year that have ever turned 65. That's very meaningful. So what does that mean? What does that impact does that have on this business?
Yeah, I just did that event, Boom 65, and you know, it comes with challenges and opportunities. There's going to be a demand on facilities, home care, assisted living facilities, as the growth of our senior population starts to seeking out more care. I think it could cause our insurers to be more selective in underwriting to manage the higher risk that they might face with this aging population. I also think that there's going to be a huge shift towards home health care. I just came back from a healthcare conference, and I told them, you guys are going to be very, very busy. You know, that's the number one question I get all the time. Does long-term care insurance pay for home health care? I think with this huge growth, we're going to have to keep looking at the home, because that's where everybody wants to be. So I think insurers are going to start looking at, you know, innovative designs to come up with healthy aging in place. I keep hearing that terminology. I also think it's going to prompt more discussion, government involvement on state mandates, and how we as long-term care insurers and private long-term care insurance can work together to find the right benefits for that client. We're just going to have to come together and team up, because this population is exploding and they're going to need care. We're going to have to find solutions on all fronts.
No, absolutely. And I do want to give both Jeremy and Wendy a chance to answer that. But first, I do want to dig a little deeper on one thing you said. You mentioned kind of looking into the crystal ball and seeing that, you know, there may be some product changes that need to happen. I mean, is there anything that you see, or you're already hearing rumblings, or you're already kind of feeling like, okay, this is something, if this is important to you, you might want to lock this in, or you might want to start doing this sooner rather than later? Not to say that's what's going to happen, but anything that's already on the radar in that world.
You mean on the carrier side of things?
From a product, yeah, like a product standpoint, or anything you feel like, you mentioned that carriers might end up pulling back a little bit. Is there anything you feel like you're
you know, I say with a growth like this, you know, I've been doing this for 25 years, and Wendy could probably tell you, you know, I worked at Genworth too. And I have a lot of clients going on claim right now with Genworth. Even from 25 years ago, I've seen changes in underwriting becoming more strict. So with our population exploding like this in that 65 plus market, you know, I don't have a crystal ball. I'm just saying what I've seen in the past, that we should prepare for it. And the message I send to clients is, don't wait. You know, a health concern could come right around the corner. So start planning, like Wendy said, start planning, you know, right now, because we don't know what's going to happen. And we don't know if those insurance carriers on the underwriting side might pull back. But I do think in the last 25 years, looking at all the products, I'm loving what I'm seeing that the insurance carriers are bringing to us for versatility, from you know, care coordination to cash indemnity, all of these things to help these clients age in place. We as long-term care planning specialists, we need all the tools to get that message across to the families, but that's not just, you know, one product. You know, these carriers work very hard to bring the strongest solutions to us. And it's up to us, Buddy INS, specialists across the country, or just financial planners, to try to find the right solution.
Couldn't agree more. Could not agree more. certainly, and I should just defer it over to Jeremy, because Jeremy, you being on the carrier side and so innovative, right? And other carriers being innovative, I'm just asking the question over because I want to hear your answer. And by the way, I want to thank One America and USA Swimming and Indy Sports for a fantastic Olympic trials at Lucas Oil Stadium. I just had to put that in, Derek. You guys did an outstanding job. Okay, so I just wanted to, so I'm curious, Jeremy, so carrier-wise.
Yeah. I think you'll continue to see innovation to meet the demand that Karry so cleanly laid out there. And One America's, just one carrier, but this is, as both really all of you on this call know, this is a major pillar to our business. We are committed to this business. And so some may be aware, some may not. But as an example, Wendy, last week, we rolled out a newly enhanced version of Asset Care to meet exactly what Karry was discussing there. So not only did it come with a decrease in pricing across the majority of the cells, but I would say even more important than that, we put things into the policy thinking, okay, what is the demand now? Of course, to age in place, to stay in your home as long as possible. What is it going to look like in 5 years, in 10 years, in 20 years when a lot of these folks claim? And oddly enough, at One America, we're really hyper-focused on that 60-plus age group. That's kind of our sweet spot, right? I mean, obviously, the younger, the better, but we are at a point right now where we have a lot of people in this 65-plus that still have no plan. So we're very positioned to help them. But a couple of the features that we added, first and foremost, we are now allowing for complete independent care providers, even throughout our lifetime LTC benefit. So that is a pivotal change. Karry, you're shaking your head, and Wendy, we used to require just legitimate, in-home care, assisted living. So to have the ability to hire a neighbor that's a CNA, a friend of the family that's an RN, and there's a variety of things we'll accept, because we know, to your point, Karry, the demand, we could get in a pickle down the road where it's hard to find legitimate care, and you need to find some sort of independent care. We also now allow cash to pay out on the entire first component of the policy, the life insurance, so straight cash, to provide, a family member, if that is sort of during the figure it out period, they're going to hire a family member. We're going to allow that, and we'll even send in once a month on One America's dime what we call a caregiver consultant. I like to think of it as a coach. This is somebody that will come in. They're typically coming from a home health care agency. We are paying for it, not the family or the policy. And they will come in and help guide them through how to provide that care. So maybe mom's hip gets worse and now I have to lift her and I have no idea how to do that. This person can do that either virtually or in person. So we'll continue, and I think the other carriers will as well, to make more of an effort than to just write a check and say good luck, to really be there throughout that journey the family has through care. I know that's a long-winded answer.
No, it's a great, wonderful answer, because I think what it also, we talked about a little bit earlier, is that it's also in the carrier's benefit, whether it's One America or anybody else, to help this process be more efficient and more effective. That's actually good for the carrier too, because again, to say, let's write a check and let's just, pay it out and do that, that's great. No problem with that. But is it actually more expensive on all parties because people don't know what they don't know, or people are, going down a bad route, or just, getting inappropriate care, or again, completely not understanding what other resources are available to them. That's such a big one, is what resources are there? What is out there from a government perspective, or from, Medicare or Medicaid? And what is this whole picture that you're trying to put together, not just now in the planning process, but when you actually need it? And it's very in depth, but I think it behooves the carriers to try to be hands-on where they can. It actually is a benefit to them as well as the consumers and the families.
Real quick, I know we don't have a lot of time. I just want to highlight you, Jeremy. I work with all carriers. I just happen to be working on an application for One America. And those highlights, the enhancements that One America just added, were all of the concerns of my client. She was still going to move forward with a One America plan, but I'm helping her with her application today, and I said, I have great news for you. I'm sorry. I have some enhancements that they've added since we've looked at the product, and she's excited. You know, those were the things that she was concerned about: independent caregiving, cash indemnity, access to that. They also have a 0-day waiver for home health care that was important to her. So I just wanted to say, great timing to One America.
And I do like, Karry, how you were saying she. So let's talk about women in long-term care. 2 words come to mind: caregiving and longevity. We live a heck of a long time, longer than men. I always, when I'm having conversations with couples, it's always, the men hear it, and no offense, Jeremy and Derek and the men on this call, men hear it, like they hear it, but women understand it. Women will live an average of 19 years without their spouse, either through death or divorce. I have currently 16 clients on claim, not to mention the tens and tens and tens before that on claim. Oldest claimant was 98 years old. Today, these 16, 14 are women. There's not one of them older than the age of 76 years old, not one. So 37% of people needing care today are under the age of 65. And we should never overlook that. And when you're thinking and talking to clients, it's great we talk to them at their 50s, and because that's when they're getting it. Their kids are in college. They've got maybe some extra money. They can put that toward that. Their careers are safe. But never underestimate or push aside the 40-year-olds. The majority of clients and men and women that I sat with and wrote policies for were 38, 40, 45 years old, because they were young, they were fit. You've got 62% of the population today that couldn't qualify for a long-term care policy, depending on the company, if their life depended on it. And so health is always going to be an issue. Women live longer. Women are concerned about this. They are the healthiest, wealthiest generation of women today, that 55 to 75-year-old woman, than that has ever come down the pike. They've been financially savvy. Yet you go into a facility today, assisted or nursing home, and I don't know about you, Karry and Jeremy, but when I'm on the road, and I'm on the road and certainly was on the road a lot, I would go into these facilities. Today, it's no different. Over 80% of the people sitting in a facility today, whether they're walking upright or shuffling around with a walker, are women. And the killer about that, in a facility or even assisted or even at home, they didn't start out that way, having no money. When they get to that Medicaid state, they've gone through their money with their spouse. Spouse needed care. That money was there. Women go into a facility, and let's face it, nobody raises their hand to go into a nursing home. A family member, a loved one, places them there for safety and otherwise. But my point being is, they didn't start out that way. When women and men have nothing at the end, they didn't start out that way. Somewhere they were financially stable until they weren't. And that's where we come in, to help them see that picture, that, look, if you needed care today, what's the plan financially? And I think advisors on this call, you guys get it. You just need to ask the question, have that conversation.
Really good. So we've talked a little bit about the states, and I want to go back to that. And Jeremy, I'm going to lean on you here. So we'd be remiss if we didn't talk about some of what's happened in the states. You know, Washington, with the Washington Cares Fund, made a lot of noise a few years ago. Any of you who had to put in an application in with anybody, it was terrible. We had very few comparative to probably a lot of folks that are, you know, truly in this market day in and day out, and it's all they do. And it hurt quite a bit. So, Jeremy, you know, you guys so focused on education, so, you know, ear to the ground. What are you seeing or hearing out of not only, you know, Washington itself, who's kind of backtracked and then they redecided what they're doing and how they're doing it, but also other states, and where do you think the state side of this is going?
Yeah, I mean, that's a great question, Derek. And the simple fact is, there's no arguing this, the largest payer of long-term care services and supports in this country is Medicaid. Uncle Sam has known this is coming. They've known we've got this large segment, the rat moving through the snake, so to speak. we cannot continue. We are not funded to the point that it can go down this path without some sort of additional funding or change. Washington was the first piece of state legislation. Prior to that, we had seen the partnership, which very much helps the case for traditional policies. We had seen the 1996 HIPAA legislation, which allowed certain life insurance policies to be used tax-free for long-term care. And then we saw the 2006 Pension Protection Act, or we call it PPA, that allows certain annuities. So there's been sort of a carrot and a stick approach. But in 2019, the Washington CARES Act was the first piece of state legislation that ultimately required that all people W-2 income ages 18 years and older who did not have a private long-term care policy, as defined by really what the state and the feds consider long-term care, so that it had to be a true Section 7702B. So it could have been a accelerated death benefit rider, it could be a traditional policy, it could be an asset-based, but it could not be some of these other things, like an income doubler on an annuity or a chronic illness rider on a life would not count. Right. So it was a mess. I think I lost a lot of hair and gained a lot of weight carrying those. I happened to cover Washington at the time. It was crazy. I mean, it got to the point where folks had until November of 2021 to get it done. And by August, there wasn't a carrier left standing. Yeah. And so now what you have is a bill has been brought forward that if you live in Washington, you know this, I-2124, and I think we can send the article on this, but it basically proposes to make this Washington Cares optional. And the challenge with that becomes, many actuarial models suggest that if it becomes optional, it will ultimately collapse the entire thing. Where I think it may be a good thing for everyone is, in retrospect, I really believe in my heart the state would agree with this as the carriers. There's options for the states and the carriers to work together. Unfortunately, right, Wendy? Unfortunately, right. The CARES Act, that did not transpire. It was purely a state initiative. We've seen 13 other states in some manner express some interest in doing something along these lines. Really, it's been kind of quiet. I think a lot of the states are waiting to watch and see how this goes. The next state that would be the closest to, in terms of the most movement, is California, but nothing moves quick in California. But they did put together an entire task force, and they hired a third party, Oliver Wyman, to review, I think it was 5 different potential tax programs and give their sort of feasibility on it. They got that back to the state. I believe the deadline was the beginning of this year, and I haven't seen anything. I don't know if either of Karry or Wendy has. I haven't seen anything. The goal is this, though. It's not that we want to use this as any sort of scare tactic. Right. It's more just the idea that, to Karry's point earlier, these states are in a pickle, and something's got to give sooner or later. So the more we can educate, let people know there are incentives from a tax standpoint, right, to self-fund like you're doing, but do so in a better manner. To, while you're young and healthy, lock in that traditional policy, whatever it may be. There's a lot of incentive that the American public doesn't know. So again, I'm sorry I took some time there, but I wanted your audience, Derek, to kind of get a feel for what happened in Washington and maybe what might transpire elsewhere.
Well, I think too, the good news of that, because Bernie and I, my husband and I and our family lived in Washington State until 2021, and then moved down here to St. Petersburg, Florida. So I remember when I first came in the industry, Karry, you're going to remember this, where Washington State they sent a letter to every citizen in the state. They spent fortunes on getting these pieces of letters to consumers going, hey, we're going to do something special in the future, and it's going to be a mandate. They didn't call it a mandate, but going back to my point about a positiveness that came from that is people started to pay attention. What is this about? You know, that whole year that ended up happening, that in 2020, 2021, nationwide, the biggest amount of long-term care individual policies that were sold was 150,000. When the mandate happened, And everyone was going, I better get my own policy. 450,000 long-term care policies were sold in the country. So very few, and Jeremy, correct me if I'm wrong, very few people dropped those policies because they finally understood with the education and the awareness that this is something that I need to pay attention to, even if it's a small pool of money. Now, if they make 100,000 or more, that little 36,000 didn't make sense for, but those younger people that were employees to hold on to that, because something with a great company is better than nothing. And Trustmark did that.
Absolutely. It caused more conversations, which is a good thing in what we're doing here. And so I put in the chat there, and I apologize, I think I duplicated the one link accidentally that was actually the previous kind of care planning document that Jeremy had mentioned. But then there's two links in the chat. The one is the Insurance Newsnet that's talking about, okay, what's going on with Washington next, and then the other is, if you really want to geek out, digging into the California task force and what's going on, because it's kind of fascinating when you start looking at, okay, what are the requirements? Can it do this? Can it do that? Is it, how are we calling this? Does it have COLA? Does it not have COLA? There's things that if any other states follow suit, there's people are looking at what happened in Washington and do I want to learn from that or not? Because I know one thing that happened in Washington was a lot of folks looked at what is that minimum standard and how do I just get the bare minimum to avoid the tax? And that was something that, a lot of clients and consumers were going for. And it was up to the producer, the agencies, the industry to kind of look at that and say, okay, wait, let's hit pause. I remember I had one where somebody wanted that. And for, I think, an extra like $100 a year on how young they were, we were beefing it up in a number of ways. And it's like, hey, let's pause. We can do that. But here's just, you're young enough, you're healthy enough. We can do just a couple of things. And this is not going to be what you think it is. And it was just taking a step back and having that conversation about, hey, let's talk about one or two things here. And let's not just do the bare minimum. But I do know if any other state were to go down a similar path, so much of what spurred that attention was your high income earners, because the tax hit them much harder. Yeah, it's the same percentage, but not having a cap on that tax we had a couple people making, mid six figures, $1 million plus, going as W-2 employees, professionals going, there is absolutely we can get the most juiced up long-term care policy we could ever pay for, and it's better than paying for this tax.
I've never been more exhausted in my whole career in 2022. And with respect of time, I think Jeremy and Wendy, they hit the nail on the head. It's raising awareness. Right. We need to do something together. But I want to hear about group long-term care, so I'm going to zip it.
Absolutely.
I just have to say, though, first, I just got to say, when I came into the industry, so that was 1997, 98, there were 133 companies that sold long-term care insurance. Now, some of them had like 20,000 policyholders, but it's been amazing over my career, Karry's career, Jeremy's career, Derek, to see that 133, and let's face it, a lot of them just didn't need to be there. They got in it for all the wrong reasons, to have this great group of great carriers. And that is really so key. And it's a segue to the group policies, right? Because and Derek, you have a question. I know I jumped onto the group before you had a question about the group.
No, you're good. You're rolling. So it's just, the question is very simple. How is Group Solutions come back into the mix? I know, I love it. Where are we now?
It's been gone for what, 12 years? It's exciting because you've got great carrier. A year and a half ago, there was two carriers that offered group. And now by the end of January, I think we'll have close to 8. So you've got Trustmark, Chubb. These are premier carriers in the group space. So you're not getting a fly-by-night company. You've got John Hancock, Allstate, Transamerica, just great companies in this space. And I love the group market because it does take care of those younger ages who are not thinking about long-term care at all. And they understand or are getting that education. And we do a ton of webinars. We just do a ton of education on this. So when they go in and look at group, meaning HR, they're looking at their employees. Employers understand very well that, hey, I've got people leaving the workforce to provide care for a loved one. And most of them are women, but you've got a lot of men doing the same thing. You've got this generation of 30, 40-year-olds that are seeing this firsthand. So the group offers so much. It's everything that a standalone product can't possibly offer. Guaranteed issue. You've got, I mean, there's just so many things. The guarantee issue, I think, is one of the most phenomenal things. Simplified issue for spouses, takes you up to the age of 70, no health questions asked. I love that. The dual benefit of both the life insurance, which, right, Jeremy and Karry, the hybrid policy where they've got the life benefit and they've got the long-term care benefit as well. And it's built on either an IUL or a UL or a whole life chassis. You've got, and I talk about this a lot because you've got 52% of the workforce are women. And women typically are not buying life insurance. Why aren't they buying life insurance? Well, either their husband has it or, nah, that's for men. I mean, honestly, I talk with 40, 50, 60-year-old women that go, no, I don't need that. So it goes back to the education on that as well. But here's a dual benefit to take care of the long-term care as well as provide family protection. And I think people, certainly in our experience, we do enrollments every month. We'll enroll close to 1 million people by the end of January at Buddy. So, I mean, it's a huge market. You've got employer contributions, so you can have executive carve out. The group market is no longer for just 100 and 1,000 people. It goes down to 5 guaranteed issue with employer funding. The coverage it's not a standalone. I mean, it's a smaller amount of money, but it offers so much to so many people in that space. So we're excited about it. It gives a lot of value. It pulls out the education. It talks about the enrollment as well, because most people on the group side look at enrollment and they want to lump it all into health benefits. We do separate enrollments, and whoever and whatever platform it is, it's always great to do a separate enrollment for that group, because then you can really drive the education and the value and the leverage of that there.
Yes, and
There's a lot.
I think, no, it's perfect, because what it also hits on that we've already talked about is that you may be in the employee benefits business as a producer, that may be your shtick or what you're really good at, but I know a lot of producers in that space that they've just, long-term care is it's just gone. It's kind of out of their mind because it's just not been a possibility for so long that it's just, well, I know nobody really does it. Or even if they were to do it, okay, I guess I could try, but I don't have any. I'm not in the jumbo market. I'm in like the small business market, and it's just nobody wants that. And you just hit on, no, they do. Actually, they do. Those are options again, and I think it goes back to as well what you guys do at Buddy INS, and there's other organizations around the country too that are tuned into that separate enrollment, that separate conversation. And I think it's a really good point of, hey, if you are in that market and you want to go after it, understand that if you try to just lump this in with the open enrollment, you're going to get really, really poor return. And that's where you may or may not get to keep that plan for very long.
And the group isn't just businesses and corporations. I mean, Karry and Jeremy know this. It's associations too. It's PEOs, it's credit unions, and those are off, state by state. And the situs depends on where that association is sitused at. But a lot of times it can be sitused in a different state, not in New York or California, where maybe that 7702B is not implemented there. But I think when you look at 50 million caregivers in this country, and 70-some% of them are in the workforce trying to figure this out. Group policies and carriers come in and go, we can help with this solution. Even if it's a small little plan, we can help you. And that's where antennas go up and they're like, tell me about it.
Yes, indeed. So we're wrapping up here. We're almost at the top of the hour. I wanted to do one more question for each of you. So I want each of you a chance to answer this one. And Jeremy, we're going to start with you. And it's, so if you only take kind of one thing away from today's discussion, what should that be?
I think Wendy kind of touched on before. The options out there, this is not your grandma's nursing home policy anymore. There are options that meet Americans where they want to be met, that quite frankly, most Americans have no idea even exist. Have the conversation with everyone. Like Wendy said, it's never too young. And hey, if at the time you bring it up, I don't bite, I don't see the need. Maybe it's me, the husband, saying I don't need that stuff. And if I do, I'll go out in the woods with the shotgun. Hey, that's the type of stuff we say, but sooner or later we will have that experience. Or maybe my wife says, look, I'm the one who's more than likely going to be the one using this. We both know I'm probably going to outlive you, whatever it is, but just have some confidence. Take that cap off of maybe what your prior assumptions about long-term or extended care planning were, and know that this world has changed a lot, and Americans are much more open to having these conversations. That would be my takeaway.
Yeah,
great. No, perfect. Karry, what about you?
I would say don't put long-term care planning on the back burner. Make it top of conversation. Use Jeremy, One America's resources, all the insurance carriers out there. One America has local wholesalers right here in Texas, in Dallas and Houston, that are phenomenal to help you start that conversation. Buddy INS has LTC specialists across the country. I'm here local, Dallas, Fort Worth. I work all over as well. I'm going to throw in 2 power questions for advisors that will be a game changer. And I'm going to say them really fast. Ask your clients this. Number 1, what percentage of your assets have you allocated to pay for long-term care in the future? If they don't have a formal long-term care plan in place, the answer is 100%.
Yep.
They have allocated to pay for care in the future. And number 2, ask your client, if you needed care tomorrow, which one of your assets would you have to tap first to pay for that care? Guess what? There's only 5 answers to that question. You can ask me later what those are.
Fantastic. And Wendy, will give you the last word.
I'd have to say managing unknown risk. As an elite athlete, you train really hard. In my career, I swam over 25,000 miles, full circumference of the earth. And it was never just about the training and getting that right and what you had to do and the pain that we went through and all of those things to be an elite athlete. But we always, every single day, my coaches, and I had many, they always had a winning strategy for me. I never had a coach that trained me to lose, ever. And so what we would do is we would train for those unknown risks. Goggle comes off when the gun goes off. You do a flip turn, your cap goes off, your swimming suit strap. I mean, you have to plan for those kind of things to be an elite athlete. The unknown risks that we face today, your clients face today, are outliving your income, an unprepared death, and the rising cost of health care and long-term care costs. And if you can work with a specialist, work with a great wholesaler, work with great carriers, and honest to God, there are only great carriers left in the marketplace, you're doing yourself and your clients such a great service. They will thank you, and their family's legacy and their family will thank you forever.
Well, we are at the hour. I want to thank each of you, Karry, Wendy, Jeremy, for your time, your expertise. Again, we're going to be recording this, or we did record, so we have that for everybody. And if anybody wants a copy of the recording, you're going to get it automatically if you registered, but they're also going to be out on YouTube for sharing. This is meant to be an open forum. It's meant to be an open discussion that we're sharing far and wide. We really want this to get out to as many eyeballs as possible. And again, just thank you each for your time. You're all available for anybody to contact. So if you got a question on how to get in touch with them or additional questions that may not have been answered, feel free to send them in or reply to the recording, and we'll make sure you get in touch. Or obviously they're all available on LinkedIn and online. It's pretty easy to find these people. They're there and available for you. So thank you all for your time and attention, and hope you have a beautiful rest of the day.
Thank you.
Thank you.